It's a beautiful, beautiful afternoon, everybody. I want to welcome you to this amazing session this afternoon. And I want to thank you so much for setting our time to join me as we discuss this fundamental issue in our syllabus. And of course, we're looking at ethics. All right. So, ethics is extremely important for all professionals. So, whether you are an accounting professional, whether you are, a legal professional, whichever profession you're into, it's extremely important and paramount that you understand what ethics is and the fundamental elements upon which it is based. All right. So ethics is extremely, extremely important for all of us. And I want to just request a call to action to you, our members, that please kindly share this live, share with as many people as you possibly can, share in different groups so that we can be able to help as many people as we possibly can to, get to know about ethics and, of course, the importance of having ethical guidelines in our professions. So, guys, I want to say good afternoon to you, Mr. Sakala. Good afternoon, Pezo. Good afternoon, Mr. Casalo. How are you? How has been your day?
Fine, thank you.
Fantastic. Mr. Casalo, it's good to have you. Mr. Sakala, can you hear us? It's good to have you. All right, so guys, others are going to be joining us soon, so we are going to get into it because we all have a short period of time. We don't have much time today, partly because we are taking advantage of this 1 hour lunch break for us to be able to do this session. So, guys, thank you so very much for coming through, and please share the video. Share the video with as many people as you possibly can. All right, so guys, there we go. Ethics. Now, this is extremely important for all professionals to understand the fundamental elements of ethics. So, what is ethics, people? All right. Now, just to begin with here, I want to comment here just from the outset that the difference between a professional and somebody who is not usually is because of ethics. When you go to Shoprite, sometimes you discover that those people that are found at the till, sometimes they are talked to in a certain way, but they keep saying, sorry, ma'am, sorry, sir. And then they keep calm. They talk too nice. Why do they do that when they can just answer you a penalty and the conversation is over? Why? So when I get into ethics, what is ethics, people? All right, what are ethics? So, guys, ethics in a layman's language may simply be able to talk about behavior and all things are happening in a presented scenario. So ethics about human behavior. Right. So the key issue that I want you to understand from the outset here as we begin to talk about ethics, guys, is that in order for you to understand ethics properly, you must always have one question in mind. If you're about to do something as a professional, you ask yourself this one question all the time: is this right or wrong? All right. If you don't think something is right, why don't you think it's not right? If you think something is wrong, why do you think it is wrong? All right. Those are the very important issues that you must be able to understand. Every single time you're about to do something, ask yourself this one question: is it right? If it is right, why do you think it is right? If it is wrong, why do you think this thing is wrong? All right. So it is extremely important that accountants, such as yourselves and me, have the public trust, because we accountants operate on the basis of trust. This is why people come to hire us to go and audit their books, because they trust our work and our work ethics. They trust our competencies that we are going to do a fantastic job and give them the assurance that they need. And as such, ethical behavior is extremely important to the reputation of the accountancy profession, and of course to the value of the accountancy and audit work. So for people to be able to respect you as a professional accountant, it's extremely important that you embrace the principles of good ethical guidelines. Now, IFAC have a code of ethics, all right? And most accounting bodies have adopted virtually all of its content. So what I want you to understand here is that ethical guidelines are stricter for public entities, such as those PLCs that are listed on LUCE, as compared to NGOs and charitable organizations. So what we are going to be getting into here is what's going to give you back the respect as an accountant, as a professional. If you want to maintain your respect, it's extremely, extremely important. In our country, we have ZICA, the Zambia Institute of Chartered Accountants. They've done a fantastic job in this regard. They've held different workshops, seminars. They've nurtured the students. They've nurtured accountants, and they've ensured that all members, ZICA members, are law-abiding accountants and law-abiding members. That's what I commend ZICA for their fantastic job that they have done. Now, just to get the ball rolling, people, like we said, there are fundamental elements of ethics, and there are 6 of them. But for the purpose of this session, we'll talk about 5 fundamental elements of ethics. These 5 things, every single accountant must be able to know. Every single professional must be able to know. Why is it important for you to understand these fundamental elements of ethics? All right. Now, I want to begin with the first one. The first one is objectivity. Right? Objectivity is number 1. I wrote an article not too long ago, and I explained a few bits and pieces about objectivity and why it's extremely important for accountants like yourselves and myself and several other professionals. So why is this so important for all professionals, not just accountants, lawyers, doctors, nurses, pharmacists, all of us, teachers? Why is this so important? Now, being objective, guys, means not to allow bias, conflict of interest, or undue influence of others to override professional or business judgments. Now, what does that mean? When we say you must be objective, we say if you're going to criticize me, you are criticizing me because you strongly believe that it's the right thing to do. Not because your wife told you, not because your mom told you, not because your uncle told you, because you are using your own professional judgment. Don't allow comments of other people to override your professional judgment, competence, and skills in making a decision. So, objectivity in the audit concept means independence. Are you an independent professional? Do you make decisions because you strongly believe it's the right thing to do? If you are a doctor, if you are a lawyer, if you are a judge in court, you are passing a judgment on a case. Do you pass that judgment because you strongly believe it's the right thing to do, or because your wife told you so, or because your fiance told you so, or because your boss or somebody told you so? So, objectivity is extremely, extremely important because it signifies the independence of auditors and several other professionals. So, in the context of the external auditor, the external auditor must be objective. It's extremely important. But when you say you must be objective, not just being objective on paper, there are people who are so good on writing things on paper, all right? You must be seen to be objective by the shareholders and the users of financial statements. The reason is simple, all right? If the shareholders do not think that you're objective, they will not trust your opinion, people. Your opinion is as good as useless because nobody believes you, nobody trusts what you're saying. So once people begin to see that you're objective, they will trust your opinion. This is why, even as we comment on social media, sometimes we see, the government makes a policy. An objective commentator is going to criticize because it's the truth, or is going to appreciate because it's the truth, not to take sides because you like certain political party. That's not objectivity. Objectivity means if the government does something fantastic, you are honest enough to say, this is a good policy. If they do something dongolistic, you know what, this is dongolistic, because you're an objective person, you're independent, you're not taking sides. So you, the external auditors, must avoid to be linked in any way to your clients. So being objective also means having a clear mind when carrying out tasks. For example, nothing should be there to influence your audit work if you're an auditor, for example. Right? So when you're passing and accounting double entries, for example, you must only consider the provisions of the International Financial Reporting Standards and not what will increase revenue. There are sometimes where the company promises, they say, okay, fine, Mr. Director, if you can increase the profits before tax by 10% this year, we're going to give you a bonus of so and so. Sometimes there's a temptation to reduce the cost of sales so that you can have a higher gross profit to increase the net profit in the end. And that gets you a bonus. But is that being objective? No, it is not, because you are using creative accounting to benefit yourself. So the key issue, people, to being objective is independence. All right. You must be independent in your mind, and the outside world should believe that really this professional, this auditor, this director, this accountant is independent. All right. That's what objectivity means. Doing something because you strongly believe it's the right thing to do. No biasness, no undue influence from those you love or your workmates or your friends, but because you're using your own professional judgment, competence, and skills in arriving at a decision. That, people, is what makes you a unique professional, a unique doctor, a unique accountant, a great teacher, and a great lawyer, a great judge, a great dad, a great mom. Those are the qualities. So objectivity goes beyond the professional life. It goes all the way into our daily lives. Are you an objective person? Do you treat everybody equitably, or are you a biased person? So being objective means even when somebody you love so much has done something wrong against somebody don't even really care for, but you're going to be objective enough to tell them, you know what, I think that was wrong. You should not do this, treat other people like that. You are being objective. Don't allow your feelings to override your judgments. That's what makes you a professional, and that's what earns the respect in the industry of professionals. So, guys, those are extremely important issues that you must make sure you understand. All right. Now, there's something else we'd like to mention here when it comes to objectivity. What other things would we like to mention here, people? All right. Now, one other thing we'd like to mention here, we'd like to go into the next aspect, of course, of elements, which is professional competence and due care. Now, this is where people feel shy. All right. A lot of people feel shy in terms of doing what is right. Sometimes you are called, all right, sometimes you are called to go and do a job that you cannot be able to do. And what do? You accept the job. No, I can do this job. You go and do a job, you do a dongolistic job. So, as professionals, professional competence and due care is extremely important. And what does that mean for you, professionals? You could be an auditor, an accountant, a lawyer, a nurse, a pharmacist, a teacher, whatever it is that you are. Professional competence and due care means that you're supposed to maintain professional knowledge, skill at the level required to ensure that clients receive competent professional service. And you're supposed to act diligently in accordance with applicable technical and professional standards. What does that mean? If you hire an accountant like myself, right, and then you give me a job, I come to your workplace, I have the documents as a qualified accountant, but I cannot perform. That's not nice. Professional competence and due care means that you must maintain a certain professional knowledge and skill at a level that is required. If you are an accountant, it is not supposed to be an advantage if you do a bank reconciliation, because that is what is expected of you. You've been taught how to do a bank reconciliation. If you do control accounts, if you do a financial statement, it should not be an advantage, because that is the level of skill that is required by you as a trained professional. If you are a doctor, for example, it is not supposed to be an advantage if you can detect that somebody has got high BP, or somebody has got a UTI infection. That's not supposed to be an advantage, because you've been taught how to detect those things. If you work in the lab, it should not be an advantage if you detect that somebody's blood has got certain elements are not good for their health. That's not supposed to be an advantage, because you've been taught how to identify irregularities in people's bloods. So professional competence and due care means that you're supposed to maintain professional knowledge and skill at a level that is required to ensure the people that pay you receive a service in accordance with what they have been able to pay you for. So you must be able to act diligently and in accordance with applicable technical and professional standards. You must be professional in your dealings. Don't take up a job that you're not qualified for. In short, that's what you're saying. You can't take up a job that you're not qualified for. No, that's not right. That's not right. So, I'm an entrepreneur. You just take jobs that you don't know how to do. Okay? That's not nice. All right. So is there anything else? Yes, there's something else. And this is, and I have an example here. I was once hired, because usually I speak at events. I do a lot of corporate trainings. So this particular event, I was hired to go and facilitate at this particular event, and there was a guy who was also hired. This guy accepted a job that was not qualified for. So the whole time he kept on calling me, asking me, "What should I say?" I said, "But I don't know. They've hired you to come and do a service. Why should it be me to start telling you what you should be able to say? I don't know you. I'm just meeting you. I don't know what you've prepared. I don't know your slides." All right. So it's extremely important when you are going to accept a job which they've been able to give you, accept a job that you are qualified for and you're competent enough to carry it out. So, how about professional behavior? For all professionals, it's extremely important that you exhibit this. So, professional behavior means to comply with relevant laws and regulations and avoid any action that discredits the profession. Like I told you last time, being a chartered accountant is not a sin. But there are some things I cannot do online. For example, I cannot come on and bend over and begin to twerk. I can't do that. Do you know why I can't do that? It's not a crime to twerk, but I can't do that because as a professional, there's a certain kind of behavior that is expected of me. Not that it's a crime to twerk on social media. There's somebody can twerk. There are some people who twerk their way to the bank to the bank, they can twerk all day and somebody's gonna pay for their twerking. But I can't do that. Someone else can twerk, it's okay, nobody cares. But if a professional begins to twerk, it raises concerns. People begin to talk, but how are you behaving like this? Do you know why? Because you are a professional. You represent a certain board. All right. So professional behavior means you have to comply with all the relevant laws and regulations. Don't be involved in money laundering issues, bribes, drug abuse. No, you are discrediting the profession. This is why for the Zambia Institute of Chartered Accountants, they've got rules and regulations that guide the behavior and conduct of professionals and all their members. So you, the external auditors, must not do anything that would bring the name of the accountancy into disrepute because you're going to be answerable either by Zika or SEC or whichever board you are affiliated to. So it's extremely important as a professional, you monitor your behavior. This is why some people don't get jobs because when we go to your social media to check out what you post, we discover you're twerking. How do we promote you to become a manager? When you're all the time twerking, you don't show maturity. So professional behavior is extremely important as you carry out these issues in your professional life. Another issue I want us to talk about is integrity. Now, guys, this one cannot be overly emphasized. Integrity is key. Integrity is everything. All right. Integrity is key and it means everything. Why is integrity important, people? Why? That's element number 4 of ethics, integrity. Everybody trusts a man of integrity. If you want to win people's trust, you must show that you are a person of integrity. What is integrity? We hear this word, people say, no, he's a man of impeccable character and integrity. What is that? Integrity, people, means exercising integrity means to be straightforward and honest in all professional and business relationships. You must be a person of integrity. You must be honest, holding higher standards of personal honesty and probity. Higher standards of that. So it involves exercising a degree of honesty in audit and business dealings. So you should not be able to accept a bribe. All right. That's not integrity. You also can't bribe somebody. That's not integrity. Integrity means you are straightforward in your dealings. If you have an interest in something, be able to declare the interest that you have in something. That, people, is extremely, extremely important. So integrity is key. All right. Because you should be straightforward in your dealing and in the way you act. Another issue that we have on the elements of ethics, remember the fifth one now here that we have is confidentiality. There are people just can't keep a secret. You know that? There are people just can't stop talking. As a professional, you stand to lose a lot if you can't keep your mouth shut. You must know how to keep your mouth shut as a professional. Confidentiality is extremely important. Nobody trusts a person who can't keep their mouth shut. So, what does that even mean? So, for all accountants, professional accountants, auditors, lawyers, doctors, all of us must support higher levels of imagine if you went to a hospital, people, and then the doctor tests that you have this disease that is embarrassing. You just leave the room. Then you discover that you are trending on social media. The doctors posted, "Ooh, this guy is sick. This guy does not. This guy has done this." You'll be so disappointed. You'll be hate. You're gonna sue this doctor because they have disclosed information which you only told them in confidence. The reason why when you go to the hospital and you open up to a doctor, open, you tell them how you're feeling. You tell them if you had involved yourself in unprotected sexual activities, you open up and tell them I'm feeling like this because last week I was involved in this. You're opening up because you understand the doctor will not tell anybody what you've told them because they live by the code of ethics. It's the same thing for professional accountants. When we go to edit people's clients, when we go to edit our clients' documents, all right, we come across certain information that is sensitive about our clients. You should not go to social media and post, who people make money. Wow, this company makes 10 billion. Can you believe that? No, you can't do that. So confidentiality means to respect the confidentiality of information that you've acquired as a result of your professional or business relationship. So if you come across information while you're carrying out your duties as a professional, that information should end with you. It should not be disclosed to third parties without proper authority or any approval from the owners. So it's a well-known truth, people, that if you are a client's auditor or advisor, of course, you are bound to come across information that is sensitive. Because when you're auditing, you check a lot of financial information about a client. You're going to know their competitive advantage. You're going to know how much bank they have in their bank account. You're going to know how much taxes they've submitted. You're going to know all those information about taxes, bank statements, their strategies. You cannot go and use that information to your own advantage or to tell others about it. So the underlying rule here, people, is that when you are a professional, do not disclose information that you come across during the course of your job as a professional or during the course of you conducting a business relationship, because that's going to run you into a lot of sales problems. However, there are situations where accountants and auditors are required to disclose information about a client. Remember, the general rule that you should not discuss your client with your wife, your girlfriend, your mom, your dad, your best friend, or anybody else, because it's information about a client. The same way doctors don't go and tell people about your status when you go to see them. All right. We have a very well-known doctor in this country, Dr. Mjadati. Sometimes he cracks jokes, has a very amazing sense of humor. But you've never heard of him post a client on his page saying this guy came to our hospital and is sick of this. No, he never does that. All right. Do you know why? Because he's a professional. He understands the value of no matter how close you get to him, he will never tell you information about his clients. He'll never do that. So it's the same thing for us, the accountants. When we have information about our clients, we don't disclose. It's sealed. However, there are situations where you may be forced, all right, or choose to disclose this information that you've come across. Now, there are different situations. There are only two ways in which you can disclose information about a client. And one way is what we call, the must. The must is sometimes referred to as the obligatory disclosure. So that's what's called the must disclose, where you are being forced to disclose, not because you want. Let's say, for example, you recently audited a client, and that client is being investigated by the law enforcement agencies. So the court maybe orders you to come and disclose information in a court of law. In that case, you're not going to lie under oath because perjury is a crime. You're going to go to prison for a very long time. So that's where you're going to disclose because it is the court order for you to disclose information. That's what you call the must or the obligatory disclosure of information about a client. The other way you can disclose maybe where, let's say, DEC, Drug Enforcement Commission, or related agencies are investigating your client in issues relating to money laundering, and then they call you in for questioning. In that way, you are required to do what? To disclose information to avoid being an accomplice to the crimes. The other way you can disclose is where the client in question is being suspected of treason. In this country, we know what treason is because not too long ago we saw a political opponent who was put in prison for a case called treason, which later was entered into a nolle prosequi. All right. So if you are dealing with a client who is being suspected of treason, you're supposed to disclose it because it's the law, people. But again, if here in Zambia we have Zika, the Zambia Institute of Chartered Accountants, these do a phenomenal job. It's a professional board that ensures that all professionals and all their clients are law-abiding clients, but also we are dealing with law-abiding professionals. Zika has developed policies and has helped professionals to grow in their professional careers in this country. They have done a fantastic job in this regard. So Zika has a mandate as a board, all right, to investigate certain issues that are of interest. So what do if they call you in to go and disclose information about a client because they are being investigated by the Zambia Institute of Accountants or by the SCCA? In that case, you can go and disclose. So those are the ways that you can be forced to disclose. But there's another way where nobody forces you to disclose the information, but you do it on your own because you strongly believe it's the right thing to do. And what are those ways in which you can disclose information about a client? This way is what we call, the might or the voluntary disclosure, where you ask for permission from a client. For example, if I go, I did a training for one of the very big training in this country. It was a corporate training that I did some 2 years ago, 3 years ago. So I had another job. A company in South Africa contacted me. They wanted me to go and do a similar training. All right. So I wanted to include this particular client on my CV. See the person I've done a training for this client. I've trained their directors in these areas, risk management, investment strategies, and all stuff like that. So before I could put this particular client in my CV, I called them. I have this client from South Africa who wants to engage, but they want to see my CV. Can I use you as a reference? Or can I state the things I did for you in this CV? Then they tell me, it's fine, thank you so very much, please go ahead, you can. Then I put the things I did for them because I got permission. You're not supposed to use a client information without their permission. So if they give you permission, well and good. The other way is a bit complex. It's where we call public interest. You can disclose information about a client if you strongly believe it's in public interest for you to do that. For example, let's say you work in a factory where they manufacture lotion for babies, and then you discover the lotion they manufacture for babies as a chemical that is harmful to the health of babies. That is in public interest. It's important for the public to know that this lotion contains a chemical that is harmful to the health of the babies. That is public interest. The only problem that you have with public interest is that in the context of audit and assurance, the word public interest has not been defined. It doesn't have a clear definition of the public. So when you say, I disclosed information about a client in public interest, who is your public? Which public were you referring to? All right. This is why it becomes paramount for you before you can disclose information in public interest to seek legal advice. Call your attorney, ask, hey, dear attorney, I've come across this information and I strongly believe it's in public interest for us to disclose. But what do you think? What's your say on this? So that your attorney can advise whether to go on and do it or not. Because there are sometimes if you are in a hurry to disclose information, for example, if let's say you suspect that your client is involved in money laundering or maybe tax evasion, you have to seek legal advice. There are some laws that support your client's behavior that you may not really understand. So if you're in a hurry, you may take action and then discover there's a law that supports that. For example, did you know that in this country, if you are a student, maybe you go and live abroad for some years, you can come back with a vehicle in this country and you don't pay any duty. Did you know that? So some people have abused that loophole in the tax system. What have they done? They know somebody from the neighbor who is coming from abroad who doesn't have money to buy their own car. So they say, please buy a car in your name so that you don't pay tax. I'm going to give you something. There are people who do that. It's a loophole in the law. There are people who still report nil returns, even though they have made some profits. It's a loophole in the law to do what? to submit new returns. So sometimes there are certain things people do, not because it's a crime, but because they're taking advantage of a loophole in the law and they are using it. So if you're not careful, you go and report, you end up being sued. All right. And nobody wants to deal with a mouthed accountant, a mouth auditor. No, people want to do somebody who's professional, who keeps his mouth shut, not just unnecessarily talking. All right. So those are the issues that you must understand. So the issue here, the main focus that I want you to understand, that confidentiality is extremely important for professionals. Like I said, remember the doctor. You go to doctors to talk to them because you trust them. No matter how many jokes the doctor can crack, he will never crack a joke about his patient's health, records. He will never do that. It's extremely important for you to understand that. So now the issue that I have to ask you is, why do we have so many rules? Why do we have these rules? Why do we have this conceptual framework for us to follow in our conduct as professionals? Why? So I want you to answer these questions, people. I want you to tell me what to think about these questions, okay? I want you to answer these questions and tell me what you think. Give me in the comments, people. Why do you think it's important for us to have these rules, for us to have the conceptual framework? Why is it so important? I want to answer this question. Would it be impossible? Would it be possible to run an organization smoothly without rules? What do you think, people? It would be impossible to have rules for every situation. That's the problem. And it would be impossible to run an organization without rules. So rules prevent the use of thought. So why have a conceptual framework and not rules? Why don't we have rules as accountants? If this happens, do this. If this happens, do that. Why don't we have rules? But instead, we have a conceptual framework. Let me give you an example. In the Bible had commandments in the past. Thou shalt not steal. Thou shalt not kill. And then Jehovah God saw it fit to give us only 2 commandments. Love your God with all your heart, all your soul, and all your strength. Love your neighbor as you love yourself. Love your neighbor with all your... So why were we given those two new different commandments? Because those signified principles. So the Bible contains the principles that even though we are faced with an issue that is not directly talked about in the Bible, we can discern God's standing on the issue. For example, there's no scripture in the Bible that mentions anything to do with masturbation. But why don't we do it? We don't engage in those activities because we know they are dirty activities, and God, being a clean God, He wouldn't approve of such kind of an act. So it is not mentioned anywhere in the Bible. But looking at God's standing and these principles in the Bible, we can discern and say, you know what? God is a clean God. If God tells us in Ephesians not to even talk about sexual issues publicly, that means He wouldn't be happy with us doing these kind of things. It's the same thing with the conceptual framework. We are given these principles to help us reason, not rules. Because when we are given rules, it becomes difficult to manage situations because you can't have rules for every situation. Rules prevent the use of thought. Once you follow rules, you stop thinking. So as professionals, we should be able to rely on accountants to use their professional judgment when carrying out their assignments. All right. Depending on your morals, right? 2 different people may have 2 different opinions, and both of them may be right because of what you believe in. So when we use the conceptual framework, there's no correct answer. There's just reasonable reasoning. So now, because we don't have rules, we have the conceptual framework, we have the principles. We must protect those principles. We must protect ourselves from anything that has an impact that threatens our ability to be objective, to be independent, to be ethical, to be people of integrity, to uphold professional standards in carrying out our work, and to uphold professional behaviors. We have to protect any threat. So while it is extremely important for us to be able to use our professional judgment and think freely, it is also important to protect ourselves from such threats that may impair our objectivity. So we have talked about 5 elements of ethics. All right, 5 elements of ethics. And I have been able to throw all of them on the screen. We have talked about confidentiality, integrity, professional behavior, professional competence and due care, and of course, objectivity. So now I want to take you back to objectivity. Why is this important? How can you protect your objectivity? How do you do that? What are some of the threats to objectivity and how to protect yourself? So now let's look at the threats to objectivity and how to protect yourself. So there are threats to objectivity, all right? And how you can protect yourself from such kind of threats to objectivity. So what are some of the threats to objectivity? Now, there are some of the threats to objectivity. Let me give you a list of these threats to objectivity. You know, like we said earlier, friends, that it is essential that auditors and anyone giving an opinion be objective, not just on paper, but must be seen to be objective in reality. So there's an acronym which you call SAFI. Okay? SAFI. SAFI is an acronym that signifies the threats that may affect your objectivity. Let me just add this one here. I'm going to add something called SAFI. All right? I'm going to add something called SAFI. You know, it's a SAFI. I'm going to add M, but M is not very much important. I'm just going to add an acronym called SAFI to explain our objectivity and the threats that we must guard against. So that SAFI is an acronym. All right? SAFI is an acronym. So we said sometimes what may make you feel to be objective. Let's say you like there's a lady whom you like, either at the place of work or whatever it is, and then that lady you are in love with them so much, you just want to go and propose to them, and then they do something very bad to somebody. Sometimes you may feel to correct them because you have self-interest. That's the first F on SAFI. SSAFIM. S, the first F, S is self-interest. So self-interest is what is a threat to objectivity because you fail to do what you're supposed to do because of the benefit that you are looking forward to. All right? So what may bring about self-interest in the context of auditors as we are auditing our clients? Number one, imagine you just have one client, a big client, and this client gives you a good amount of money. Undue dependence on one client can make you become, have self-interest because, if you piss this client off and they leave you, you're out of business. Self-interest threats may be caused by that. Overdue fees. You're auditing a client who already owes you more money from the previous work. So in the end, you fail to be objective because you want them to pay you what they owe you. All right? Those are some of the issues that may make you fail to be objective. The other issue that we may to consider here is that you have to understand, guys, that there has been no guidance that has been given on how long overdue fees must be. But it's common sense for you to think that if somebody owes you money from the previous job, before you can do another job, ask them to pay you what they owe you. All right? It's extremely, extremely important. And this guidance here, we have been told that if somebody calls you for listed companies that are on loose Lusaka Stock Exchange markets, the company should not owe you 15% of your total fees. All right. If a client owes you 15% of the total fees, don't take up the new job, partly because you're going to have self-interest issues. 15% of 10 million is a lot of money. So don't take up another job if a client owes you more than 15% or 15% from the previous job that you did. Those are the guidelines. The other issue that may bring about self-interest issues may be gifts and hospitality. You go to audit a client, and then the client gives you gifts. They provide you with accommodation. They give you a hotel where to live. You are the auditor. You are very comfortable. They are paying an hotel for you, giving you unnecessary gifts. That may impair your judgment. But remember, just because a client gives you a gift does not mean your judgment to be impaired. Common sense tells you must weigh the value of the gift. If the gift is deemed to be trivial, it is very unlikely that it's going to impair your judgment or it's going to impair your independence. What is trivial has not been defined. It is simply a matter of judgment. For example, if I'm auditing a client and then they buy lunch for me, a plate of nshima. How much is nshima, people? Nshima is 100 kwacha. Is it really true that because they've bought for me in Shima for 100 kwacha, I can lose my independence of mind? No, that's so trivial. All right. So what has been trivial has not been defined, but you have to use your judgment. For me, I think Shima is trivial. Even if you bought in Shima for me, I'm not gonna lose my independence because you bought for me in Shima. That's nothing. I can buy in Shima for myself. All right. Loans may also make you lose your independence. For example, a client gives you a loan at a rate lower than the market value. Why are they giving you a loan at a reduced amount? But now here's the issue. If a client is in the business of loans and the client gives you a loan, no problem. Provided that loan is at commercial rates, no problem. But if a client does not deal in loans, but they give you a loan, why? Or if the client deals in loans, but they give you a loan at a price lower than the market value, why are they doing that favor? That may impair your judgment. That can be reasonable for you to think, you know what, you gave me a loan of 20 million and you are telling me I should pay just 5%. Why? All right. Those are the issues that you must be able to think about. So self-interest issues may arise from such kind of issues. But remember, if the loan is given to your company on commercial terms, no problem. It's okay because it's commercial terms. You're going to pay them the normal interest like everyone else, no problem. If the company gives you a gift and they give the same gift their employees in the same way they have given you, no problem. All right. How about contingent fees? What are contingent fees? How can these impair your judgment? How are they a threat to your independence? A contingent fee is a fee that is based on the outcome. For example, where the company tells you, if you audit us, you're going to pay you 10% of our profit before tax. That's a contingent fee. Imagine a company that makes a billion kwacha like Zanaco and Absa, and they offer you 10%. Can you imagine that? That's a lot of money. All right. So contingent fees are not allowed. Okay. They are strictly prohibited. What other issue that may impair your judgment? Lowballing. What is lowballing? Lowballing is an act of charging audit fees to your clients at a price lower than the normal rates. All right. Now, this one is done by a firm of auditors in order for them to benefit from other services offered to the client. So lowballing is allowed, people. It's not a crime. It's okay to give somebody a discount. However, it is recommended that it is not done because of the fact that the price at which something is charged, is determines the quality expected. If you're going to give me a discount and you give me the same quality as everyone who has paid in full, there's no problem. But the problem with discounts, sometimes they affect how you're going to cut out an assignment. Sometimes there are people call me. They want me to do their corporate trainings. And some of them offer me very low amount of money. I'm very much honest. I say, you know what, and fake be a fantastic job. But there are some times where people come for consultation, and sometimes they want other services. You give them a discount. But if you give a discount, it should not affect the quality of the work. But if the discount will affect the quality of the work, then don't give it. It's not okay. So a discount as a way of affecting your impairment, your judgment. Because sometimes if somebody pays something too low, you don't become so serious. If somebody pays something better, you become more serious. So it's extremely important that you pay attention to prices. How do you price issues? That may signify a weakness in your judgment, right? And just so you know, as professionals, we must avoid unnecessary discounts, all right? In order for us to maintain the integrity of our profession. Another issue I want to talk about is, of course, self-review. How is self-review a threat? So you can see from that acronym on the board. From the acronym, we have SAFI, all right? The first S was self-interest. The second S there on SAFI is self-review. What is that? What is self-review? Now, self-review, this is where, you prepare financial statement for a client, all right? And then the same client comes and asks to come and audit. So there's a risk there that you may begin to audit your own work. You may begin to review your own work. And as such, it may impair your judgment. How? Imagine you prepare the statements for a client, all right? And then you come back to audit them. Then you discover there was an error or a mistake. What are you going to do? There's a higher chance you are going to cover up because you're the one who did that. You're just going to collect and cover up. All right, that's the danger. So self-review may affect your judgment. So what should you do? Avoid any self-review threats. Now here's the problem. Some people, here's what they say: a client may hire you to go and do certain services for them. So before you can classify a service as self-review, you have to understand in which category is this service falling. Let's say a client calls me to go and do taxes for them. All right, so I do taxes for them, and then I come back to audit them. That's not self-review. Do you know why? Because taxes are governed by a different professional board, ZRA. So if I make a mistake, I will not be the one to come and review my work. Once I make those determinations and I do tax, returns for my client, it is ZRA who is going to examine those tax returns and advise as to whether they are in conformity with what's supposed to be or there's a problem, if there are any discrepancies. So I will not come and review my work. So you must understand what service is this that I'm going to do for my client. It's not every service you must avoid. You have to understand which service is this. Is this something I'm going to come and have to do to have something to do with? It's a one-off service. I won't have to look at it. Someone else will go and check it out somewhere else. You have to understand that. All right. So it's extremely, extremely important. But again, self-review may also come out in different areas. Let's say you worked for a company last year and then you resigned, you joined an audit firm. Surprisingly, the audit firm that you have joined is coming back to audit the client where you worked for last year. That may pose self-review threats, but because you worked for this company, maybe you're a finance director also again, you deal with financial statements, then you're coming to audit. So when you are told that you worked for a client, you have to ask yourself, what was the position that I had in this particular client? If it's a different dongolistic role that has got nothing to do with financial statements, there's no self-review. But if you are the senior position, say finance director, financial manager, and stuff like that, then there may be those kind of self-review threats. This is why they say you must allow for 2 years to pass, all right? Because once 2 years has passed, there's no self-review threat. If you worked for a company 2 years ago, you join a team of auditors, you go and audit them, there's no self-review because last year and the other year, someone else audited them. They already checked your work. So this year, when you go to audit them, you're not checking your work. This was 2 years ago. So that is SAFI, SS. The A on the SAFI acronym, which we can see, is advocacy. Examples that give rise to advocacy threats could be, the word advocacy means to be an advocate, like a mouthpiece, all right? A representative of somebody, all right? So when you're a representative of your client, you lose credibility in the eyes of the shareholders. They've hired you to form an opinion, and suddenly you become a representative of a client. The shareholders are going to be shocked. They say, what is wrong with you? We are paying you to give us an opinion, and suddenly you are representing your client in court. So in that case, it may bring about threats to your independence. However, when you are being called, for example, to go to court, all right, and argue for or against your client, there's no advocacy threat. An advocacy threat arises when you are being a witness to your client. Your client has been sued and you go and stand as a witness. That's advocacy threat. You are speaking for your client. That's not good in the eyes of the shareholders, but also it's not just a good thing to do. But you can only eliminate that threat if you tell the client, if you're allowed to speak for the client and also against the client, in that way you're fair. There's no biasness. So there's no advocacy threat. All right. And those issues may arise in court cases, those court issues. All right. Now, you have to be careful, guys, here, because there's a trap here. All right. Like I said earlier, if you can argue for or against the client, there's no advocacy threat. Your judgment may not be impaired. Your independence may not just be affected if you are only going to argue for the client, just to support your client as a witness. That's a problem. But if there's no you just supporting your client, yeah. And what may give you to become an advocate of your client? Sometimes it could be contingent fees. When you've been offered a lot of money, 10% of before tax, then that may give rise to advocacy threats. But because you may want to speak for your clients so that they can pay you back those contingent fees. If you piss them off, they won't pay you. Okay. So contingent fees, all right, those may, yeah. So you have to take note of contingent fees, people. Legal services, right? Negotiating with the banks in behalf of your client, negotiating with tax authorities on your behalf of your client, all right? Making decisions on behalf of your clients, that also may signify advocacy threats. Not just court cases, but also all those issues may signify advocacy threats. So that is SAFI. How about the F? The F means familiarity. Familiarity is not a very good word in Bemba. In Bemba, it means ichibereshi. In Bemba, familiarity means ichibereshi. All right, it's not a very good statement. So familiarity chibeleshi. How can that impair your judgment as a professional? So examples of issues that may give rise to familiarity threats could be family relationships. The finance director is a son to engagement partner and stuff like that. Or maybe you've been auditing this client for too long. For over 8 years, you've been working with this client. That may bring about familiarity issues because you've become like family. You've worked together for a long period of time. All right. So for exam purposes, ensure that you read the scenario properly. All right. So that you can understand whether there's familiarity or whether there's nothing familiar. But also, you must look for indications of any change in management structures, accounting policies, systems within the audit client, and stuff like that. So, the key thing you must look for, the key word you must look for in the opening paragraphs for the exam scenario, sometimes the examiner may give you, it gives you a position. You are responsible for something, or you are the auditor senior, you are the auditor assistant, you are the engagement partner. The examiner always gives you a position that is going to be linked to the audit team or to the client. So it's extremely important. Then the other R is intimidation. Intimidation comes in too many ways. This is where a client is threatening to sue you. You are intimidated. You fail to use your judgment because you are scared. All right. And then there's what is called express intimidation and indirect intimidation. Express is where, for example, somebody tells you, if you don't do this, I'm gonna sue you. That's express. You've been threatened, you've been intimidated already. Perceived is different. Let's say you are a junior accountant and you've been put on a team of senior auditors to go and work with them. You are going to be intimidated on your own because you are scared maybe of the experience that they have. You think you're not good enough. So that may make you to be intimidated on your own. That is perceived. But again, the other way it can come through because you are dealing with PEP. A PEP is a political
Hello, am I the only one not getting Mr. Lusambo?
Even me, I can't get him. I don't think he's even, maybe he has been logged out.
Guys, I've noted that I was logged out. At what point did you lose me? Please give me a comment. What was I saying when you lost me? We have to conclude in a minute. At what point did you lose me, guys? Give me a comment, please. Memory, Chansa, Peso, Mr. Casaro, at what point? What was I saying when you lost me? Somebody give me a comment. You might mute your speaker, please.
Hello, Mr. Lusambo.
Yes.
You are talking about, is it expressive intimidation?
Intimidation?
Yes.
Oh. Okay, fantastic. Okay, so let's conclude. So, so from intimidation, okay, fantastic. So intimidation, we talked about express intimidation, and of course, I've said a lot of things. It was a long time, huh? Okay, fantastic. So on intimidation, it says if you're working with a politician and a politically exposed person, you may feel intimidated. Are you sure that's why you lost me from, guys? Didn't I talk about conflict of interest?
Or the intimidation.
Oh, intimidation. Okay, fantastic.
You even talked about a junior not being very confident.
Oh, okay, fantastic. So for a junior not being very confident, people, that may pose about intimidation, because if you're working with a senior auditor who is very much competent and very much confident, they may intimidate you because you think they're more qualified than you. But also a PEP, a politically exposed person, may also pose some intimidation if you're not very much careful. You're dealing with a politician, politicians have a way of commanding you, they may intimidate you. All those may pose threats of intimidation. All right, fantastic. So intimidation also may come because of family relationships, hurting your dad. All right. Sometimes undue depends on a single client. You have one client, and this client is, knows they are the only ones who give you business. They can begin to dictate the prices, intimidating you. If you refuse, you're going to look for someone else. Sometimes intimidation may come across by having financial or business relationship with a client. You owe a client money, or the client owes you money, and stuff like that. Or where the author is asking for a second opinion, the client is asking for a second opinion from a different firm. That may intimidate you. Okay. So a second opinion is an opinion given by the external auditor on financial statement of a non-audit client. Now, the guidance on the request to give a second opinion is that the guidance, guys, on the request to give a second opinion from a non-audit client is that second opinion should only be accepted if permission has been granted by the client auditors. If a client comes to you and says, give me a second opinion on this particular audit, you have to tell them, dear client, can I get permission from your client auditors? If they say yes, then you can go ahead. If they refuse, don't do that. The other one is management. Management is the last M, the M on the sub theme. The M is management. The idea here is simple to keep clients and auditors separate so that the management can know their duties, the auditors can know their duties, to avoid where auditors are taking up roles of management. This may pose threats in the future. So the safeguards that you can carry out in conclusion, guys, is you're supposed to rotate the audit staff, especially senior audit staff, every 7 years, right? Don't allow having shares in the company that you're auditing. That may bring problems. All right. Use separate teams for services. All right. Other services, maybe you want to do taxes for the client, go and get a team from Kitwe to come and do taxes. Remind management of their main responsibilities when it comes to company decision-making processes. Don't accept contingent fees. Don't let the client owe you 15% of the little money if you're a listed company, and they should not owe you 10% if you're a private company. Okay. The other way you can avoid these threats, you may want to do a code review, a audit review. A audit review is where you simply, after you are done, all right, before the audit is finalized and signed, you say, what have we done wrong that we can correct now? A code review is where everything has been signed and presented. Then you say, what did you do wrong that we can do better next time? Then you can also do a peer review. This is where you let a partner check the work of another partner to just see things are okay. We are going to talk more about code and audit review later, not now. Okay. Finally, in conclusion, under a minute, we have conflict of interest. Now, conflict of interest arises when you're auditing two types of clients. For example, you're auditing Airtel and MTN. These are direct competitors. So there could be conflict of interest, partly because you're supposed to act in the best interest of your client. So if you advise MTN, this is going to disadvantage Airtel. So how do you manage that? Some people say avoid. No, don't avoid. Manage the conflict of interest. All right. So what you can do here is that before you even accept a client, you have to consider the conflict of interest with existing clients. Let's say, for example, you're auditing MTN, and then you have you have a request from Airtel and Zamtel and Mobile, whatever this new company they are calling. You can tell them, okay, fine, I already have a company in the same industry that I'm auditing, so maybe this may bring about conflict of interest. How can I manage them? Maybe we want to use a separate team of staff to do the audit, or maybe we want to use different partners to head the teams. Or maybe you may want to also engage a third partner to oversee that the teams are kept separate and apart. Or maybe we want to impose strict confidentiality rules to avoid crossovers of paperwork and information. You may do that. Or you may even just tell both clients of the conflict of interest. You know what? Thank you for the request, but I'm currently auditing Airtel. Are you okay with me auditing Airtel and you? If they say yes, then you go to Airtel. Dear Airtel, MTN has hired me to go and audit them. Are you okay me going to do the job for them? If they say yes, go ahead and then manage it. If they refuse, you are at liberty to choose which one you want to go with. Okay. Yeah. So those are some of the issues. So resigning should just come at the end. Don't be quick to resign. Okay. Resigning comes at the end. So guys, that marks the end of today's session. All right. Thank you very much for coming through. You guys are awesome. You're fantastic. And I'm very grateful for today's session for coming through. All right. So it's been a wonderful ethics session. All right. We are discussing all things ethics. For those of you who are just joining us, we are discussing all things ethics. So what we are talking about, we're talking about ethics. This was a public lecture on ethics. So thank you very much, guys, for coming through. If there's any question, I'll be happy to be able to respond, and I'll be happy to hear your views. So any questions for me, guys? Are we safe, guys? Everything okay? We had an ethics public lecture. That's what we are dealing with. So Pezo, Mr. Casaro, Memory, Chansa, of course others have left it because it's lunch. It's all right. They'll come and watch the recording. So guys, are we safe? Any question for me, or we are okay? Are we all right? Hello guys, are we safe?
Yeah, we are safe.
Fantastic. So guys, thank you very much for joining me. Have a fantastic day. And for those of you who are coming for the first time, you were still enrolling for the June 2023 exam classes. All you have to do is call the number 0953-979798 if you want to enroll, and we'll be happy to enroll. You are not late, okay? We've not done much, so you can still catch up and be able to do better in the exams. So guys, thank you very much for joining us, and for other professionals who came through, may God bless you. I'm always grateful for having such an amazing audience of attentive listeners. Robert, it's good to have you. Irene Banda, fantastic. Always good to see you. Proud Akim, fantastic to see you. Catherine, it's good to have you. So guys, thank you so very much for coming through and for your participation. Have a fantastic day. And, bye-bye.
Bye-bye.